Today's market looks like it is undecisive of where to move. As you can see how the candle closed yesterday, we did went up to a high, but this long doji candle actually closed below, which shows that sellers are in control. But if you can see what has happened over the past 2 days, even though with a lot of geopolitical news of the US-Iran war coming up with a lot of new updates, we are seeing stocks holding steady. So, what is really going on here? Because when the markets ignore bad news, it usually means something bigger is building underneath the surface. So, let's take a look at what happened in the markets today. So let's start with the S&P 500 here. So you can see over the past 2 days, we had a decent bounce. And right now, the S&P 500 is actually sitting at this resistance area of 6760. But as you can see, the moment that it got close to that resistance, sellers took over, it sold down, and we actually closed the day with what looks like they call a gravestone doji. Now, this basically means buyers initially came in to push the price higher, sellers came and pushed it back down, and we kind of ended with no clear winner. And this is a little bit of sign that we are not seeing a very strong trend, so it is more of indecision. And when you combine that with what we saw last week, selling from systematic funds, those CTA funds, and weakening retail demand, and the fact that we are entering some sort of blackout where more people are holding cash, which I will explain later, it kind of tells you that the upside is starting to lose a little bit of momentum. And when we look at the Nasdaq, we have successfully reclaimed these support levels, and this is a pretty strong support which has been tested a few times. You can see this area over here, and most recently since January, this exact support was actually tested 5 times for now. So this is a major stepping zones where institutions have been constantly stepping in. And what we saw over the past 2 days, it is also the same indecision that we saw happen with the S&P 500. Now, here is the thing to monitor, because the more times a support level gets tested, the weaker it becomes. Because think of it as that support where there are a lot of buyers queuing up there. After a while, the prices has went down there a few times, and buyers have really come in to buy. After all, there might be a lack of buyers, and this will cause a break, right? If there wasn't enough buyers and more sellers starts to step in. So if this level that we see here breaks with volume, we might see that acceleration to that downside, and that first level of test would be at that 24K. Now, so what would be that catalyst of it causing to go down and break this support level? Let's take a look. This is where everything starts, the geopolitical catalyst. We have seen more new updates coming up, and what we saw is the Iran's top security chief was killed in an airstrike, and this significantly escalate tensions even more between the US and Iran. So markets immediately recognize this as a risk event. That's the reason why we saw the indecision in the stock market yesterday, where the candle actually closed lower, even though it's positive, because this isn't isolated, right? This is an event which brings the market to be concerned that this war is going to extend longer. And unexpected, Iran has already responded, vowing retaliation, launching missile activities, and escalating even more pressure. And this is where we start to see the markets pricing in worst case scenario once again, because we are talking about this active conflict which has no signs of de-escalation right now. And internally, even in the Trump's administration, we are seeing some cracks form as well. And we saw the top US counterterrorism official, Joseph Kent. He has resigned in protest of the Iran war. And in his words, he said he cannot in good conscience support the ongoing war in Iran. And Iran actually poses no imminent threat to our nation. So this adds another layer of uncertainty, because apart from seeing what the US and Iran are doing on the ground, if we start seeing internal cracks, internal disagreement on strategy, this is a sign, right? And if we look deeper into the resignation letter, which was published publicly, right, the concern is pretty clear, which is questioning the justification and long-term consequence of the conflict. So you can see, you understood better than any modern president how to decisively apply military power without us getting drawn into never-ending wars. And right here, earlier in this administration, high-ranking Israeli officials and influential member of American media deployed a misinformation campaign that wholly undermined your American First platform. So you can see that the key thing over here is that Even though this is kind of like a politically right letter, but the key thing is right over here that this second paragraph that Iran posed no imminent threat, and we started this war due to pressure from Israel and its powerful American lobby, right? That this was something that Trump was being pressured by Israel. And it was not something that the US wanted to do of their own accord. And this kind of narrative increased uncertainty for the markets because it suggests that the situation may not be as controlled as it appears. And this is where the macro picture starts to extend as well, because we saw that the US actually Trump delays the meeting with China's Xi Jinping president as the war in Iran raged. They were actually supposed to meet today on Wednesday, but Trump has delayed this meeting because of what is happening. And not only that, China is also not stepping in to help stabilize the situation. Now, this is critical because, as you know, China is one of the biggest power, right? And Trump meetings Xi might actually help to de-escalate the situation. But the fact that he is delaying this, it might seem that the situation internally might be a little bit more concerning that requires his attention to stay. And this shows a lack of global coordination at a time when coordination is exactly what the markets need. And another thing is that if you guys know previously that Trump actually called on his NATO allies to actually help to control the Strait of Hormuz to deploy their ships. But you can see that what he shared in his tweet is that most of our NATO allies that they do not want to get involved with the military operation against Iran. And if you understand from the other countries' perspective, it makes sense, right? Because this war was something that Trump himself started. So why would they want to step in and risk their people? And so this is another layer of political escalations, right? That NATO do not want to get involved, even though US has called on them. And this again signals weakened global coordination, where they do not want to be involved with Trump. And this actually undermines his authority. And this is another layer of uncertainty, especially when alliances start to fragment. Oil prices started reacting as well to the risk of this war prolonging, about the lack of confidence in the US and the level of uncertainty. We can see that crude oil is going up towards $100 and Brent actually break past $100 as well, even though as of this video, it is at $99, hovering around the same area. Now, but something actually happened as well that kind of like curb a little bit of fears, which is the White House actually stepped in. So this is Kevin Hassett. So he is the secretary, and he reassured the markets that supply chains are intact, the strategic oil reserves are ready, and that the conflict may resolve quickly. And he also said he dismissed the fear it could impact the economy and the last of our concerns right now. So this is his thoughts, right? And we don't know how true it is, but this gave a little bit of comfort to the market. And that's why we saw the market didn't really panic to the sense where we had another U-turn, which was from green to red. And we held that level and we still closed green by the end of the day. So the narrative kind of shifted from being like a full-blown crisis to what we call a controlled situation. However, institutions are not ignoring the risks. Now, if you look at this chart is a global fund manager survey, which shows the cash levels that they are holding right now. And as you can see right now, cash levels of the fund managers have jumped to 4.3% from 3.4, which is the biggest monthly increase since COVID. Now, of course, it's not as high as what we saw in earlier times, but this is more of the monthly increase. If you can see the length of this bar right over here. So what does that kind of tell you? What does this tell us? It tells us that fund managers and huge hedge funds are getting defensive. They are not exiting the market totally, but they are definitely preparing for volatility. And now we come to the most important event that is going to happen today, which is the Federal Reserve meeting, the FOMC meeting. Now, markets expect rate to unchanged. Even right now, as we speak, there is a 99% chance that there will be no rate cuts. So the focus is not whether they cut rates or not, because it's most likely 99% a no cut. But more importantly, it is every single word that Jerome Powell will be saying. So every single word that comes out of his mouth will be scrutinized by the markets, and people will be looking forward to what he is saying about oil inflation, How is he seeing inflation over the next few months? Is it going up or down? And what people be looking for, what he's going to say is, will you actually cut rates? But the odds of him actually saying he will cut rates, knowing Powell, is he probably will not give a very clear idea. But considering the situation now with inflation higher, oil pushing inflation possibly higher, at most you might see it delay. But take note that Powell is leaving in May, and the next Fed chair, who will he be? We have no 100% clear idea right now, but it also depends on how he will react when he comes in. And if Jerome Powell give any sign that the Fed will push rate cuts further into the future, if they do, that will tighten even more financial conditions and pressure stocks. Now, while all of this is happening, there was one team that continues to dominate, and that is AI. So Nvidia just had their GTC conference, which is one of the biggest AI conference of the year, and they are signaling massive demand. Just take a look at the things that they have, the use cases that they have shared about AI. So this conference actually reinforced the idea that AI infrastructure spending is not slowing down. There is new architecture, new chips, liquid cooling, and expansion across the supply chain. And it all fed the same message, which is the next phase of the AI build out is getting broader, deeper, and industrial. Now, we did see the stock itself had some sell the news behavior, but the bigger takeaway is more strategic. And Jensen Huang, okay, he actually projected $1 trillion in order tied to their Blackwell and Vera Rubin systems, while also expanding into AI semiconductors for EV. And this belief gave investors a reason to keep supporting semis, and it was also one of the reasons why we saw the market holding up over the past 2 days, even while this geopolitical situation dominate the macro tape. Now, and to AI spending as well, Meta also committed up to $27 billion of AI infrastructure with Nvidia. So Nvidia is a data center provider. So this also confirms, and it is in line with what Nvidia is saying, that the AX CapEx cycle is still accelerating. But there is a catch, which is this level of spending requires massive capital, and that introduces financial risk. And that risk showed up immediately because Nvidia's actually right after that proposed and private offering of 3.75 billions of convertible senior notes. So consider this like that. And this actually caused their price to actually drop 10% because, when you're raising that means you're going to dilute existing shareholders. So even with AI, there is strength, but there is also pressure. And in the AI story, Micron is another piece. Their earnings are coming out this week as well. Expectations are going to be extremely high going into this, right? Because it's being driven by demand for high bandwidth memory being used in AI servers. We've seen Micron rally very strongly over the past few months. And right now, we are actually seeing the stock pricing in a lot of the optimism. So the bar is going to be very high, but it's going to monitor because this might also be a shock and it might rock the market of what we are seeing the come in the past 2 days. And away from pure AI, we saw two consumer-facing stories that gives us a little bit of a useful contrast. First, we saw Delta Airline. Their stock jumped as really great travel demand offset surging fuel prices. So they will be affected by increased oil prices because of their planes, right? You need oil to actually run the planes. And despite rising jet fuel costs, the company actually raised their guidance to 15 billion, supported by strong travel demand from both corporate and leisure travel. So this stock surge and airline peers actually move with it. And it tells us that demand is strong for now to offset part of fuel cost pressure. But on the consumer side, we are also starting to see some cracks. We saw Lululemon stock actually fell, even though they beat on their revenue. However, their profits actually declined. So revenue was up, profits was actually down significantly. So the margins are getting squeezed and growth is actually slowing. So what does this suggest? This suggests that higher income consumers are starting to pull back their spending, right? This is what we are seeing right now. So what's the overall take? Now, 3 main points. The first one is market is definitely cautious now. We are still not in a clear bullish trend yet. No strong conviction right now. The market is holding up, but it is hesitant and not aggressively buying as well. We are seeing support levels holding, but there is some level of exhaustion right now. Second is mixed signals right now are driving the stalemate. So on one side, we have supportive factors like the AI strength and resilient economic data from Nvidia as well as Micron earnings coming up. And on the other hand, we see rising oil prices and escalating tensions over the past few days. They are creating pressure. So it's like a tug of war that we are seeing right now. And the last one is what will give us an idea of which side of the tug of war will win is the Fed meeting tonight. Okay, this is the next catalyst that we are seeing. And this is what the markets are waiting for. I think that today, when the markets open, they will be waiting for what Federal Reserve Power will say later. And that decision will likely determine if the next move will it be even more rocky or will it be more stable. And that's all I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button. It will really help me to create more of such videos for you. Thank you, and I'll see you in the next one.